On the technical front, let's connect with our expert today and welcome on board Kunal Bothra. Very good afternoon, Kunal. So what's the take coming in on the index level? Bank Nifty, slight underperformance today, but do you expect that to catch the momentum going ahead as well?
Well, I believe it's a phase of the markets where a sector leads or lags. But then all you have to do is, in the construct of a price trend, which sectors would consistently show signs of strength and which are the ones which shows underperformance. Like for example, in the last 3-4 months, we've seen mid caps and small caps completely outperforming, outclassing many of the other large cap and the traditional large cap stocks and sectors. Even within a sector, if you try and bifurcate the large cap and the mid cap, small cap outperformance, the divergence is extreme for many of the sectors. So it's very difficult to try and actually pinpoint which sectors could lead or lag the rally. For example, right now the PSU banking stocks are performing quite well, but the private sector banks continue to underperform. Broadly, I would believe that in the last 3-4 days of this market rally, you've seen multiple textures emerging quite well, chemical stocks making a comeback, the media stocks again making a comeback like Zee, Sun TV, etc. You've seen rally coming out in sugar names. So many of the smaller sectors, the slight high beta sectors, these stocks have made a very good comeback for themselves, and that adds to more, I would say, vibrancy across the broader market plate. So 19,300 remains to be a support for the index, and till the time we trade above the supports, the view remains to be biased on the Nifty, even though the outlook is more bullish towards the mid caps and small caps.
Right, outlook bullish towards mid caps, small caps. So you're clearly seeing a rally still continuing, right, Kunal? Please correct me if I'm wrong on that one. Also, I'll add one more question here. Talk to us about some of the larger names which have been laggards this year. The likes of an ITC has really not performed as well. An HDFC Bank has really not performed as well. A Kotak Bank has not performed. What's your sense on that? Because that will then drive the next rally going forward, isn't it? So one on the mid cap, small cap, and one on some of these larger names.
Well, absolutely. Harsh, you are absolutely right in this particular aspect that when the next rally starts off, or if the large cap starts to participate, that's where the next leg on the upside is what we can expect for these large cap stocks. But remember that this kind of a churn which is happening where large cap stocks underperform and then mid caps and small caps, they start to participate. It's a process. It's a phase which lasts for sometimes 3 months, 6 months. There have been periods in 2017-18 where this outperformance or this kind of outperformance lasted for at least 1 to 2 years for mid caps and small caps compared to large cap names. So it's very difficult to decipher which part of the extreme we are. One of the ratios which you look out for is the Nifty to the Nifty mid cap and Nifty to the Nifty small cap. They have not yet entered into the extreme overbought territory. I'm talking of extreme overbought comparing to 2008, 2010, 2015 and so on and so forth. So we are not exactly at those overbought or frothy points. Yes, we could be entering if we see another maybe 5% rise in the mid cap names over the very short term.
Right. That's great perspective as always, Kunal. Also, talk to us about your top picks in this market.
So I'll go with 2 buy calls. The first one is actually a buy on Glenmark Pharma. I'm expecting many of the pharma stocks which have been lying a bit low over the last 1 or 2 weeks to make a comeback. Glenmark could be one of them. 805 is the target. Stop loss could be kept at 772. And the second would be a buy on AB Capital, something which I've been highlighting earlier. Looks very attractive for a target of 200. Stop loss could be kept at 188.
Okay, thank you so much, Kunal. With this, we'll